I can see our next two people coming in. I'm super pumped for this talk. We've got Tracey from Bamboo. Tracey's an absolute legend. She's coming over from Perth. She must be early over there, maybe 6 a.m. I'm not really sure. And then Zeneca, an absolute legend. Zeneca's, as I said, been in the trenches for so long. He's going to give us some great insights. Hopefully I can give you some words of wisdom as well as we talk about how to build a portfolio and profit from the bull market. So, there you are there. Hey, team.
Hello.
Tracey,
Hello.
I'm going to hand over to you
Hello.
now. I'm just going to sit back and relax. You can ask the questions, but I'm going to grab my water. But I'm so excited. So, Tracey, all yours.
Good morning, everybody, and welcome. And yes, a quick shout out to my fellow WA Massives who will be joining us bright and early over here in the wee hours. Grab yourself a coffee and fuel up for what I'm sure is going to be an amazing day ahead. First cab off the rank, and it is an amazing lineup, as Ben has suggested. Some truly amazing speakers and Greg Oakford. So let's get this. No, just kidding, Greg. Let's get this show. I had to do it. But let's get this show on the road. And I'm excited to be first up. And the panel this morning features none other than the great man himself, Ben Simpson here. No intros needed there. And equally as inspiring and cultured, the legendary Zeneca. So, hey, boys, and welcome along.
Hello. Good to be here.
Thank you, Trace. Zeneca's looked like he's been in the trenches all night. Ethereum's up 8%, I think.
Yeah, I definitely woke up a few times in the middle of the night, checked my phone, and couldn't go back to sleep for a bit. These bull market things.
What a great morning to check your phone. Everything's looking frothy again. But we don't have long, so I'm going to crack straight in and I'm going to make sure that we keep on track. But this one is all about building a portfolio and profiting in this bull market. So let's get started and talk about some of the common mistakes that new investors make when trying to profit in a bull market, and how can we avoid those?
Ben, you want to kick it off?
I'll kick it off. I think what I'm seeing at the moment is that because the space is moving so fast, I think people have forgotten we're out of a bear market and into a bull market. And when you see your portfolio growing so much, you get this feeling that it's never enough. Like I had this conversation with our clients yesterday. It's like you're up 30, 40, 50% in a month, but because you're not at 80%, you're disappointed. It's like crypto is this game, like you feel as though you're never winning. So what I see a lot of people do is they start chasing coins and chasing narratives. And probably at that point that you've given up on your coins and you flip, even as an example, like right now, and I'm not to say that XRP won't keep going up in these 2017 coins, but we've seen even overnight, a lot of those 2017 coins are having a bit of a breather, down 8-9%, and then these other coins are starting to run. And I think time and time again, people switch out of the coins that they probably should be holding at the very wrong time. So I think patience is a big one.
Yeah, I mean, extending on from that, something I talk about a lot is death by 1,000 cuts, and it's something I'm a victim of myself, where it's just like Ben said, you chase the new thing, you just overtrade basically. You spent the bear market, you've built up some positions, and I am a big believer in adjusting to new market conditions. Maybe you see meme coins taking over, maybe you saw the 2017 coins making a surge. Good to have conviction, good to make some trades, but don't overdo it. And I think that's something that gets basically everyone first cycle, second cycle, even third cycle. It's so difficult not to feel that FOMO and just ape into random stuff because your friends are in, your group chat's in, someone on Twitter's talking about it. It's very, very difficult to resist that temptation.
And also maybe, no one went broke taking profits, as I like to say, because look at those people that are up 400% in a month on XRP. Okay, well, let's move on. And maybe when building a crypto portfolio, how do strategies differ between the bull market and the bear market that we've just seen?
In a bear market, I'm a lot more defensive. So like in a bear market, coming into 2023, I was all BTC and ETH. I think in a bear market, like a proper bear market, most alts will bleed out against Bitcoin. The BTC pairs is pretty ugly. So for me in a bear market, you really want to try and be a lot more defensive, sit in stables, sit in BTC majority. But then in a bull market, that's where you can really sort of dial up the risk. And I still believe you should have a good chunk of Bitcoin depending on where you're at, just because I think that is the asset. And depending on sort of your risk appetite and where you're focused, like I know, Zen's way more in the trenches than I am. I'm probably sitting a lot more in my spot longs with my different alts I'm sitting in because I'm just, quite time poor. But if you have a little bit more time and you are in the trenches, that's where you can really sort of dial up the risk a little bit. But I definitely think you want to be definitely more active in a bull market, but not over trading like Zen was saying.
Yeah, I think again, extending on, I agree with everything you said. Extending on that point of my portfolio is probably like 80%, 90% in the higher risk things, memes, NFTs, altcoins, AI agents. But I know myself, I know my situation, and that's the thing. Everyone is different. You need to come up with a plan and strategy for yourself. If you've got a full-time job, 3 kids, 2 dogs, you get like an hour a day max to spend on this crypto stuff. You should probably be still heavy in Bitcoin, ETH, Sol. Maybe pick 1 or 2 alts that you can manage and watch that position. If you're like me, you're just like a full-time bum degenerate who can spend 16 to 20 hours a day on Telegram and Discord and just doing whatever. You're in a position to take more risk, and I think that's the biggest thing, is just knowing yourself, having your own plan and strategy, and sticking to it. Because again, going back to the previous point, it's so easy to see what other people are doing and be like, oh my god, I'm missing out because I'm not doing this, that, or the other. But you're comparing yourself to a 17-year-old kid with infinite time on his hands and no responsibilities as well.
And
Yeah,
Zen,
two really different strategies.
Zen, really quickly.
Ben, just want to ask you then, mate, when do you flip your strategies? When are you like, okay, this is my strategy. I'm in the bear market now. I'm flipping, to the bull market.
Yeah, I wish I could just like wake up and turn the switch and now, bear market's over and the bull. But I think it's like slowly and surely. And that was actually, I'm interested to hear from you, Zeneca, in terms of in a bull market. Like, how do you optimize in terms of portfolio growth? Like, are you looking against USD? Are you looking against Sol? Are you looking against BT? I'll be keen to hear that. But I think, Trace, like for me, it's monitoring like just where the market's at, and it always changes, right? And it's so volatile. Like we've seen, it was only a month ago. Bitcoin was at 60K pre-Trump being elected. Like we were like, if Harris was to be elected, no way could I afford to put this summit on him. We were all back at Woolies. You know what I mean? So like, but then it flips and then it all happens. Like there's so much news that comes out so regularly. You've got to be on the ball, and you've got to be sort of monitoring things. So I think it's like, unfortunately, it's not just like, okay, we're in the bull market, because there's a lot of things that have been unexpected, especially like the 2017 coin pump. Didn't expect that. Ethereum to probably underperform for the last year. Didn't expect that. Layer 2s to underperform. Didn't expect that. So, but then on the other side, there's been a lot of good stuff that's happened, like, whether it be some of the DeFi plays or maybe the AI plays, or, Solana has done really well for us. Like, so it's always just, crypto never ceases to amaze anyone. And as soon as you think you understand it, that's probably the time that you need to, reset and refresh, because crypto's a fun game. It's never as easy as just, here's the playbook and get after it. But can hear you.
Well, look, talking about a fun game, Zen, you might be able to answer this one first off. This cycle's already shown us some really unique trends. What is different this time compared to previous bull markets?
There's a lot that's different, but at the same time, it's a lot that's the same as well. They say history doesn't repeat, but it rhymes. And, we've seen the 4-year cycle. We've seen Bitcoin leads the way and then other things follow. And I think we're largely going to see the same thing play out this time around, where Bitcoin, almost everything bled against Bitcoin on aggregate over the last couple of years. Bitcoin dominance, hit 61, 62%. But now it's dropping and maybe alts have a chance to run. It seems that every bull market, there's a thing that goes absolutely crazy, like tulip bubble mania crazy. 2017 was ICOs, 2021 was NFTs, 2025 TBD, but it looks like it's like to me at least, it looks like some combination of meme coins and AI agents and the confluence of those two. No one knows for sure exactly how crazy things will get, and if that will be it, or if something else will take over. But memes have certainly outperformed almost everything else this cycle, and I think that we probably continue to see that play out for the duration of the rest of the cycle. So yeah, that's kind of what I'm seeing. The thing is that they are obviously way more risky than, just holding your Bitcoin, ETH, and Sol. And that's why, again, it comes back to having a strategy, knowing yourself, and being aware of what you're doing. And to go back to something, Ben, you mentioned before, in terms of how do I look at my portfolio and maximizing it against USD or BTC Sol. Historically, I've always thought of it in like USD terms, but more and more over the last year or so, I've been trying to switch that mindset up and think about the opportunity costs. Like, if I'm going to buy Sol meme coins, am I going to do better than if I was just holding Sol? If I'm going to buy ETH NFTs or AI agents or meme coins, am I going to do better than if I was just holding ETH? And I think that that's something that not enough people think about. They're like, oh, I can go make, 5, 10x on this coin, and maybe I'll lose on this coin, and on aggregate, I'll 2 or 3x my money. And, if you just held Sol for this whole cycle, you could have outperformed almost everything else already. So thinking about that, I think, is important as well.
Yeah. Ben, your thoughts?
Yeah, I think opportunity cost is a big one. And I think that's what a lot of people, when they come to us is asking like, should I hold this? Should I do this? And it's like, well, in my opinion, the reality is most of the market, unless it's complete garbage, will go up in a bull market, but you're just looking at opportunity cost. And it's very hard to predict what's going to outperform others. But for me, it's just trying to sit in coins that you're happy with the fundamentals, you're happy with potential narratives, you're happy that, you've got some sort of like, community feedback that you think this space is going to where it is. And for me, it's just more about risk appetite and the time you have in the market. So like, let's say you're investing in your SMSF and you're 63, like you're probably not going to be in the Solana Phantom trenches on pump.fun. You know what I mean? Like that's probably not the best place to stick your money. But if you're 17 or 19 years old and you're just playing with a bit of fun money, well then that's something you might want to play around with. So it really depends. But I think one thing I'm trying to continue to set in our community is just try and set expectations right, because in a bull market you just get so carried away. Like I said at the start, it's never enough. You never make enough money. There's always someone making more money than you. You've just got to keep a lid on it and understand what is your edge in this market. We've got to remember that this is a market, and I say this all the time, we're not living in some metaverse AI thing. It's like, no, it's me versus someone else on the screen. There's winners and losers. And in most bull markets, most people actually lose because they don't sell. Their head gets crazy. They're never making enough, and then they never sell. So I think always bring it back to taking profits, realizing that this won't last forever. We're going to go probably for the next year and things are going to go absolutely nuts. And they're all going to go back to whatever the hell we're doing before, AI agents on Twitter and meme coins pumping. Realize that it's a limited game and it'll come back again in 3 or 4 years, but like make the most of it, like Zen said, but don't get carried away.
Look, before we move on from this question, we're talking about unique trends, and I feel like we've got a unique opportunity because Zen, you are in the trenches. This is, you're doing this day in, day out. Talk to me a little bit about the AI, the meme coins. Do you see meme coins, falling over in the next 3 to 6 months? Is it a bit more long term? Is AI going to take over? Give us your kind of round it out in a couple of minutes for us with a bit of alpha.
Yeah, I mean, I think meme coins, they've been around for ages. Like Dogecoin is a decade old at this point, and we've seen previous cycles, meme coins like SHIB from last cycle did really, really well. So they're not exactly a new thing, but I think that there was kind of an inflection point that happened at Token 2049. This guy named Murad gave this really great 20-minute keynote speech. I think most people have probably seen it, or most people like full-time crypto have seen it, where he really laid out his thesis for meme coins and why he thinks they're going to do well. Now, I don't agree with everything he said, and I don't agree with all the coins he mentioned, but the underlying theory being that people are kind of sick and tired of VC coins where insiders are dumping on retail. The average participant doesn't have a chance to buy coins before they even hit the market, and meme coins kind of like equal out that playing field a bit. I think that appealed to a lot of people and will continue to appeal to a lot of people, and it's sort of like it puts the power back into the hands of the people, which is kind of what crypto is all about at the end of the day. So I don't really see meme coins ever disappearing entirely, especially now that we have this pro-crypto government in the US. Gensler is out. The chances of it being negatively regulated too badly seems less likely to me. So I think meme coins are going to continue to dominate this cycle. Most of them will go to zero, like everything else in bull markets, but there will be some that survive cycle to cycle. Like you have Doge that survived cycle to cycle, SHIB, and again, a bunch of others. AI agents, I think, are the more interesting thing to me. I think there's actual value and utility there. I think, you'd have to be living underwater to not see that AI was a big thing in the world today. Ever since ChatGPT came out a couple of years ago, God, only a year ago, actually, kind of the whole world has changed. And the sort of confluence of AI and crypto, I think, is something that is going to be absolutely massive. Again, most of the AI agent coins and tokens will go to zero, but I think the technology is really interesting and fascinating, and we will have more. I mean, I think in 5-10 years, almost all of the stuff on the internet will be AI. It'll be artificial content. It'll be AI agents that have their wallets. There'll be AI agents trading on behalf of you. You won't do your own trading. And so we're in the first innings of seeing how that is going to be developed and formed and will play out. I think it's also a narrative that more people can get behind. Like meme coins, a lot of people just dismiss as, oh my God, it's just a stupid cap. There's no value there. I don't believe in it. I'm going to completely dismiss it. Especially like the quote unquote more serious investors or institutions some institutions are in meme coins, but like most of them dismiss it or don't even want to touch it or don't want their, their liquidity providers to know they're touching it. Whereas AI agents, I think everyone can get behind and be like, you know what, that's cool. There's utility, there's value. Someone's building cool stuff. I'm a developer. I'm going to build cool stuff, etc. So, yeah, meme coins and AI agents, probably more of a focus on AI agents will probably be the prevailing narrative of this cycle. And we're starting to see that play out now.
Right. Awesome. Great answer. Look, going back to building this portfolio structure, both of you now, reflecting on your own experience, what's been the hardest lesson that you've learned and how did it change your approach moving forward?
Hardest lessons. I think, yeah, I mean, the first cycle 7-8 years ago, not selling, that hurts, and you realize. And I think once you get, we've all been through it. Once you've been through that first cycle, and you go, well, fuck, I just lost a lot of money, or potentially a lot of money. You realize that's important to push forward. But I also think biggest lessons were not being patient enough. I sold some magical positions, early on that I look back and go, well, that was generational, positions that I let go because I got impatient and started chasing narratives. So one thing that I've really continued on and lessons learned is just have conviction. These are in my spot long plays, right? These are not pump.fun, plays. These are like, real high conviction plays. And I think the other thing as well is not being spread too thin in my portfolio. And again, this is why I like this panel, because Zen's in a different position than me. As a time poor person, the more coins I have, the harder it is for me to figure out what the hell is going on and when to take profits. So if you're a time poor person, I'd probably think about having more of a simplified portfolio. Like I think it's probably the largest it's been at the moment with maybe, I think I've got 12 or 13 coins. And that allows me to stay on top of these assets while running a business and doing a podcast and trying to host a summit and all these other things, which means when it comes time to take profits and sell, I know what's going on. In the past, I've had a lot of coins and I round trip certain coins because I just wasn't aware of where they were in their positions, and also didn't sell positions early enough. Like, I make mistakes. Like we're investors. You're never going to get 100% right. I invested into a Polygon like last year, and that was a pretty poor trade, in hindsight. And I then sold maybe 3 or 4 months ago, and was able to get into some new positions that are now outperformed. So like you need to have that bandwidth and ability to not only make a call when you've got it wrong, but just not have so much going on in your portfolio that it's too complex to figure out what's happening. So yeah, self-awareness, patience, simplified, and conviction is probably my top things.
Yeah, I mean, I'm literally writing a book on the mistakes I've made because I've made so many, and I think I'm a slow learner as well, because there's the saying that says in crypto it takes 3 cycles to make it. The first cycle you sell too late, so you round trip. The second cycle you have like PTSD, so you sell too early, and then the third cycle you get it just right. I did the first thing twice. Like first cycle, I just held too long in round trip. Second cycle, I also held too long in round trip. So this time around, I'm really trying to take more profits and sell a bit earlier. TBD whether I do that or not. But yeah, sort of round tripping is one of my biggest mistakes, and just holding on things for too long. And a big reason for that is, again, what Ben mentioned, having too many positions. Like even if you have a lot of time like me, there's still a certain point where there's too many positions to have. Whereas, Ben might have 13 coins and think that's sort of close to optimal for him. Maybe 20, 25 is close to optimal for me. I often find myself with 100, 150 positions just because I've spent the whole day just spraying, praying, randomly buying things that I think will take off. And I think that can be a good short-term approach. But then every few days, or at least every week, I try and sit down and like cull my portfolio. I go through every position and be like, you know what? I bought that. It's not doing well. I don't think it's going to do well. I'm going to sell out of it, even if it's at a 90% loss or a 70% loss. Maybe I leave a tiny, tiny bit as a move bag, and then put that into the higher conviction plays that I have. And I'm just trying to have less positions, and there's this thing exercise I try and do as well, where it's like you list out every coin you have, and like you write it with pen and paper or in a Google Sheet, Excel, and then the column next to it you rank it by conviction. Like, all right, Bitcoin number 1 conviction, ETH number 2, Sol number 3, all the way down. Pepe as a meme coin could be number 7. You have a lot of conviction, but there's some random dog with hack coin you just bought in the trenches that's like 120. All of a sudden you got a list. Let's say you have 50 coins. Ask yourself why you're holding the bottom 50%. Like, all right, you've got 50 coins here and you have more conviction in this half than this half. unless there's a good reason for holding these, and maybe there's a catalyst coming up, maybe you think that, this one can 100x if the right thing happens, sure, you can hold that. But most of the time, people realize, oh, you know what? I don't need most of these coins, especially ones that are like closely correlated. If you have like three different, decentralized exchange coins on the same chain, they're all going to either go up together or go down together. I think just like doing that exercise and trying to sell off the ones you have less conviction in, and just holding the highest conviction positions is probably a good strategy. And again, something I could learn to do better myself because, yeah.
So what I'm hearing from you both is have a plan and stick to it. And I know personally from my 3 cycles, that's exactly it. And I know that I need to stick to my plan this time around as well. And whether that's a long-term plan that Ben's got, or Zen, you see you've got your daily plans that you're trying to stick to as well. I think it's that's a really good, clear learning that everyone can take on board. Now let's move forward to risk and feeling more reward in this bull market. How do you balance the optimism that we're all feeling right now? The market's a bit frothy, and then also caution at this stage of the cycle. Like, is it too frothy? Are we going to see another year of gains? Are we going to finish early? How do we balance that optimism with what's going on in the market?
It's such a fun topic. I was thinking about this morning as I rolled over this morning out of bed. I was like, oh, ETH's at 3,800, and remembering back like when I was buying 7-8 years ago, like $80, and you sort of do the math. You're like, well, what if it goes higher? What if it, you start, these things just creep into your head. We're humans, right? It's just never enough. So that's what's so fun and difficult about bull markets, is that you can have a plan, but I guarantee you'll change your plan, right? Like everyone does. Like, and that's okay, but you just want to make sure it's driven by some sort of logic, not just like, fucking, I want to make another $1 million, like, and then not sell. So one of the most difficult things in a bull market is that having the patience to not sell too early and sort of dropping the bag, but then also not being too greedy and then missing the entire top. So if you look back in the 2021 cycle, like for me, the biggest indicator of altcoin season is just the ETH BTC chart. Some people won't, don't believe in that, but like the ETH BTC chart gives a good indication of how long like Ethereum outperformed Bitcoin for. And it was basically like 6 or 7 months in 2021 that, Ethereum really went on this run. And it outperformed by about 200%. At the moment, ETH's only up about 20 or 25% against BTC, if that was the ETH BTC bottom. So if we're looking at previous cycles, potentially we have somewhere between 6 to 9 months to go, and a lot more returns to come. I think it's hard for people to remember if you weren't here, but like things get ridiculous in a bull market. Like things are crazy now, but they get fucking crazy. Like, and that's what I think people just need to remember. The best way to go about it, in my opinion, is just keep taking chips off the table as you go up. Like, you don't need to be a hero. You don't need to pick the Pico top. The top of a bull market only lasts for we did some research, and I think Ethereum and Solana was in the top 10% for like a week, less than a week. So you're waiting 4 years for a week. It's very difficult just to pick the top. So I think just managing your fear, managing your greed, and try not to compare too much with other people. I think that's where you can get it, things out of hand.
Yeah, I totally agree with that. I think a lot of people talk about dollar cost averaging in, but dollar cost averaging out of your positions is probably also the smartest thing to do, because you're never going to time the top. You're not even going to get that close. Like Ben said, it's so hard to get really close. So just start taking chips off the table after, prices hit a certain point. Everyone's going to have different targets and goals. It's the hardest thing to do is to time the market, or to manage your risk and know when to be risk on, when to be risk off. It really is. It's everything. I think it's sort of, it takes a special kind of crazy to get it right, because you have to hold a position that's up, 2x, 3x, 5x, 10x sometimes in order to really get the crazy gains. But then the type of personality required to do that is also likely the kind to round trip it all. And so you have to kind of change your mindset partway through, or it's so hard to do, and very, very, very few people can do it right. That's why it takes 3 cycles, 12 years for so.
We lost Zen.
We lost him.
I think we lost Zen.
I'm sure he was just.
That was a pretty good comment. I'm gonna finish off what he was saying. It takes people 3 cycles to really get their head around the wins and losses in crypto. I think you need those losses to be able to fuel your self-awareness of what you need to change next time. it's like practicing anything, right? Public speaking, or like you're starting a new job. Like you need those reps before you become like, confident in what you're doing. So hopefully those people that are in their second or third cycle, like this is the time. If it's your first cycle, I'd really probably prioritize following others, learning as much as you can, and not trying to think, you're able to do it all on your own, if that makes sense. Looks like Zen was on. Oh, here he is. He's back.
Sorry, cut out.
That's right, mate. I finished your comment, Zen. So we'll go to the next question, Trace.
Yeah, look, we'll just do one more and then we'll get into some Q&A. But this last one here, which we kind of covered off anyway. But if we could go back in time, what's one thing you wish someone had told you when you're starting out with your crypto investing? Anything?
Take profits. I mean, everyone tells you that. I think you have to get burned to really learn that lesson. But everyone did tell me to take profits in 21, and I took some, but not enough. And I think that if I stuck to it more, things would be better. But such is life.
Yeah. I think, that's definitely a good one. I'm trying not to copy. That would be mine. But I think also trying to think longer term. Crypto's not just going to end next year. Like this, we're here forever. Like this thing's not stopping. This train's not going to stop. There's going to be massive volatility in between. Take profits, but think longer than whatever you're thinking right now.
Yeah. Okay. I mean, look, that's exactly what I'm thinking as well. Just from my point of view, take profits, absolutely. And I think stick to your plan. That's my biggest one. And even still now, I'm changing my thesis as I go. And you can have a plan, you can alter a little bit, but I think you really need to stick to your conviction, not get blinded by shiny things over in the corner. I think, that's a big one. Look, let's move on to some questions. I'm going to go down to this little Slido thing here that I've got this app on my phone. Hopefully I'm doing the right thing here. But we've got a couple of questions. So guys, if you're listening, pop some questions in. We've got a good one here from Steve. Bitcoin, is it too risky to sell all your Bitcoin to maximize buying the dip, or would you recommend always holding at least some? Ben?
So I heard this good quote once. So I think it was Jack Mallers or someone on TV. When you sell your Bitcoin, you're essentially shorting Bitcoin. And when you think about that, it's an interesting position to be in, that if you're going to sell 100% of your Bitcoin, you're 100% short. Like, you would probably never, ever take that position, right? If you were actually short on an asset. Outside of Bitcoin, yes, I would definitely sell pretty much everything else in a bear market. But in Bitcoin, I do think things will get crazy and we'll have a pullback. I think it's important to take profits off Bitcoin and take a good chunk of profits. But for me, I will never sell all of my Bitcoin. I think it's just the best asset on the planet. I never want to not own any. I always want to have exposure. And back to Zen's point around opportunity cost, my goals is to build my Bitcoin value long term. That's what I'm trying to do. For me, building wealth through Bitcoin and property, and I don't own any property. I'm 99% crypto, but that's future state. Bitcoin is the asset that I want to accumulate. So I will never sell all of my Bitcoin.
Yeah, I pretty much agree with all of that. I think another way of looking at it is, if you're as bullish on Bitcoin as I think many of us are, and you're like, well, eventually it'll hit $1 million. Eventually it'll go beyond that. If you're selling it at 150K to try and buy back at 90K, great. You can maybe time that well, but you're also selling an asset that you think is going to be $1 million one day at 150K or at 180K. And yes, sell some percentage of it, but just be wary. And I know that the trap of the super cycle has caught many people before, but there probably will be a point where Bitcoin just goes up and up and up. And you don't want to get caught selling what you think is the top, especially if you sell your entire position. And then all of a sudden it rips up 2 or 3x from there. And then the next dip or the next drop down 70% is higher than where you sold it at. So I think that hold on to your Bitcoin. It's the best asset on earth.
Well, look, we've got another question around this. I think we're getting questions around Bitcoin and Bitcoin dominance, because I think this is the point in the cycle that we're at. We've seen Bitcoin have a run. We've seen Ethereum, 7% up this morning. It's about to go. This is another question from Jason. Since Bitcoin is dominant for most of the cycle, which strategy is better? All in Bitcoin first, then shift during the alt season, minus capital gains tax, or allocate and hold? So basically what he's saying is, are we all in on Bitcoin? And then when we see the shift, do we shift it all across? Again, this is probably about how do you set your portfolio, correct?
Yeah, I think easier said than done. Can hear your thoughts then. Like, it sounds easy to just go all in Bitcoin and all altcoin season, let's just shift and make happy days. It doesn't tend to work like that. We've got to remember that like crypto's now a $3 trillion market cap coin, right? And when you see Bitcoin dominance fall, like we're talking hundreds of billions or trillions of dollars. Inside that market cap, there is a range of different coins doing different things, right? We've made very good money over the last year and Bitcoin dominance has been very high. So, I don't think it's just as easy as just like rotating into altcoins when Bitcoin dominance starts to fall because you're already lagging behind. So I think it's a mix of both. I think having a good percentage of BTC and then starting to allocate in those altcoins beforehand is what I do.
I agree with all of that. And I think it also, I mean, ultimately, it always comes down to who you are and your own personal strategy. Like for some people, not even rotating is the best strategy, just buying and holding Bitcoin and like ETH and Sol, and that's it. And like not paying attention to when Bitcoin dominance is topping, not trying to rotate and catch the dips and then rotate back into Bitcoin. For other people with a lot of time and a higher risk tolerance, then yes, definitely rotate out of Bitcoin early and try and, the goal for I think almost everyone is when they trade alts is, and especially like meme coins and NFTs and the higher risk things, is I'm going to flip this stuff and buy more Bitcoin. I'm going to flip this stuff and buy more ETH and buy more Sol. And that's a great plan and strategy. It is very risky though. And it just depends on the person. Like I said earlier, I'm like 80, 90% in the higher risk stuff at the moment. But again, I'm comfortable with that risk and you have to kind of make peace with it just crashing to zero basically.
All right, I've got one here about ETH, boys. It's ETH has really underperformed this cycle. Might it be because we've seen several chains come out that directly compete with ETH's technical value offer? Thoughts?
Yeah, I definitely agree. Like, Ethereum fundamentally, I believe, is the best blockchain. However, it's not sexy. It doesn't have the narrative. It's done a lot of the upgrades. This thing's been around for years, right? So when we've seen the likes of Solana come in, Sui come in, all these other sort of layer ones, it's just a much more exciting, investment opportunity. And I think too, Ethereum sort of lost its way in terms of where it sat in the market. Like people are like, what is Ethereum for if it's high gas fees and now there's no gas fees? How does it make its revenue? Like, what is it even for? I still firmly believe that ETH will do really well the next few years. I think in terms of the total value locked, it's the largest of any chain. It's got some of the biggest companies building on it. I'm very bullish on ETH, but for the more impatient folks, yeah, of course you're probably going to be concerned. But yeah, long term, I'm not.
Yeah, I think ETH has had like an identity crisis over the last couple of years where it hasn't really, it can't compete with Solana and Sui on like transaction speed and fees. It's not as censorship resistant as blockchain as Bitcoin perhaps. There's just like a lot of things. It's clunky and fragmented with all the L2s. But I just think it's going through teething pains right now. I'm like Ben. I'm maximally bullish on ETH. I think after Bitcoin, ETH is my biggest bag at the moment, like ETH and ETH-related coins. I think there's also something to be said about sort of aligned incentives, and a lot of these other L1 chains, like take Suri for example. The Suri Foundation, they have VC-backed investors. They pay millions of dollars to influencers to shill the coin on Twitter and timelines, and they market the coin. The Ethereum Foundation isn't out there paying people to shill Ethereum on Twitter and write threads about it. And so I think that in the short term, attention is everything. And if these other chains are paying for attention, they're going to get the attention and they're going to do well. And this is not bearish Sui or Sol or any of the other chains. I think there's a place for them as well, and we will live in a multi-chain future. But yeah, I think Ethereum, the time to sell Ethereum and buy these other coins was 18 months ago. Now is the time to hold on to your ETH because I think, basically sentiment is all-time lows. It's bottoming out. We've seen, the ETH BTC chart kind of bounce off that double bottom. And I'm holding my ETH and waiting now.
Okay, guys, we've only got a few minutes and we've got a couple of really good questions. One of them, Adam from the UK, wants Zen to explain what an AI agent is, which is really cool. But I think you can do that. I'm going to send everyone to your X page, so you can do that on there. So please do that. But this other one I think is a little bit more important because we've had an anonymous person say, we talk about sticking to your exit plan when taking profits. The challenge is how to best know when to develop your exit plan in the first place, which is really great because we're sitting here going, have a plan, know when to exit, but how do people know when to do that? Where do they find that information out? Because we don't have a crystal ball. We can't say, hey, exit here. How do they get that knowledge?
I would say have just like sit down and think about it. Like it sounds simple, but it's like just take some time away from a computer, take a pen and paper, notepad, go for a walk. Think about like what do you want to get out of crypto? What are your goals here? Are you trying to pay off debt, buy a house? Are you trying to grow your wealth? Do you want to leave your job and be full time? Do you want to retire? There's so many different things you can use money for and making money in crypto towards. Do you just want to have like a balanced portfolio and have less risk um, on aggregate? And so I think thinking about it and sitting down and writing out like what you're looking to achieve is just the biggest step. And then set some stretch goals. Like, setting one goal is good, but bull markets, like Ben said before, get absolutely crazy. We haven't even seen that true mania yet. And there'll be that, if you're lucky, there'll be a point where you just wake up one day and your goal is way behind you. And then you're like, well, now what do I do? Do I just sell everything? And then you're in this position where you're flooded with emotion. You're trying to make decisions based on new information. Whereas if you'd sat down before and said, all right, in the perfect, ideal, crazy world, this could happen and this could happen and this could happen. Set some take profit targets, decide I'm going to sell into stables. I'm going to sell back to Bitcoin. I'm going to buy a house. I'm going to diversify here, there, and everywhere. But do it ahead of time, because trying to do it when you're clouded with emotion is tricky.
Ben?
Trace, I'm getting. I can't add it to that. That was everything that Zen said was spot on. I'm just getting the tap on the shoulder, Trace. So I just want to give you guys a quick second to just share with the audience really quickly, like what you guys do, where people can follow you, what's going on in your world, and yeah, just a quick thank you.
All right, I'll go quick, and then best place to follow me on is Twitter and my newsletter. My newsletter you can just find by Googling Zeneca newsletter. I'm writing a book at the moment. It should be out hopefully in the next couple of months, and I'll post that on Twitter and my newsletter and everything like that. So yeah, thank you guys for having me.
Yep. Look, Tracey, Crypto Curious podcast out every week, giving you some news. Bamboo, the micro investing app, easiest way to jump into crypto for all the noobs. I'll be back in a couple of hours for a panel with a bunch of awesome people. So jump on and listen to that one as well. But it's been real, guys. It was awesome being first up. So thanks. I've been really enjoyed it. Great to hear some alpha.
No, thank you guys. Absolute legends. Thank you so much for kicking us off. Folks in the audience, we're just going to take a quick 5-minute break, and then up next, we've got your Carlton fans' favourite, Chris Judd, Josh Gilbert, Matt Williamson, and Lisa Tay talking about the 4-year cycle, fact or fiction, how long will the bull market last? Thank you so much, and we'll see you soon.